traders, welcome to the TMT stock market strategy video for Thursday, March 31st, last day of the month, last day of the quarter. We will and should expect window dressing happening with the major funds and institutions keeping their books pretty much status quo going into the last day of the month and quarter so they can grab their commissions and bonuses for the quarter. So I don't see much of anything but up for today. I do suspect that after today we should see some volatility pick up. I think today will be a pretty ho-hum of a day. Yesterday was kind of a light day, but we did get some movement to the downside early on in the morning, and if you're quick enough you could capitalize on it. Now this morning we're kind of grinding higher. We're well off the lows. We're down about 4 handles in the ES, and now we're back up to be +1. I'm just putting it out there, guys. Please don't fall in love with the upside. All I can tell you, we're trend traders. You follow the trend, and if you're day traders, really doesn't matter. But be very careful here because something big is brewing. Don't know what it is. Don't know when it's going to happen. But be very careful out there because just something doesn't seem right. We have everything moving up in every asset class because Janet Yellen is dovish, and there's a reason why she's dovish. Excuse me. She sees a lot of uncertainty out there, especially in Europe. So. There's a lot of big things I think is going to happen, and if you're correct, we can make a lot of money here. So let's just keep that in mind. I do believe, and I titled yesterday's video, "The big move is to the downside, not the upside." And I do suspect that's going to happen in the coming weeks. Gold, I'm really liking gold at the moment to the downside. Longer term picture is bullish, but I do like gold. One more push lower. The gold miners, I like gold. The gold miners even better of a short. As you know, the companies that are in the gold mining index are pretty much garbage, aside from a selective few. The bullish percent gold miners index is at extreme levels, ready for a pullback, and I'm looking at the GDX for a good short. And it has been a pretty decent short of late if you're quick. And I don't mean holding positions, but if you can look for reversals intraday, you get well rewarded. So keep an eye on the GDX. The dollar, I don't think the dollar is over. I think once we get some volatility come back into the markets, that's really the only game in town. Is probably is going to be gold and the dollar. So the dollar, I think, is taking a little bit of a setback because of Janet Yellen dovish comments. But I do suspect the dollar to be well bid up in the coming future in the next few weeks. So why do I think that the markets are headed a little bit lower? Look at the VIX. We're at these extreme lows again. This is the VXX. I just think it's a cleaner chart than a VIX. But if you look at it, you could see when we get down to these Bollinger Bands here, we did close right on it. And if we open up this morning, we'll be well below the Bollinger Band. And then we just need the next day to close inside, and then the third day to take out that second day's close. And then that's going to be a buy signal for the VIX, a sell signal for the markets. So just keep an eye on that, guys. GDX, I showed this to you yesterday. You could see the large candles. It means we're having expansion of volatility. So that means that we are expected to vacate the premises one way or the other, up and or down. But you could see here right now it's kind of holding into this area here. So we just got to have to, it's kind of a wait and see type thing. But I do like, since we're up at these big areas of supply, I do like gold GDX lower. I need to see GDX take out 19. If we could take out the 19 area, I think we'll have a quick flush to the 18 and then right to the 200 at one point in time. And this is where if you were looking to really, if you like the miners, where you'd want to start looking to buy would be somewhere in here, or back into this sideways channel consolidation. You can see here we got some decent demand in here. So this is something that I'm looking for, but not up in these areas. I wouldn't even think about looking to buy GDX here at these areas. Next would be the spiders. You could see here a nice long-term downtrend line has been breached. We took it out. One day does not make a trend of new highs, but be very, very careful. I keep mentioning it in these videos. A lot of supply. Take a look at the volume zones. You can see here a lot of supply up in these areas. A lot of traders gotten caught long on this move, and traders that are long down below at one point in time, they're both going to need to get out, and I suspect it would probably be up here again. That doesn't mean that the markets can't go higher to 2100. It just means that I would be a better buyer at lower prices than 18 to 21 times earnings in the S&P, which is ridiculous. And watch, guys, earnings season is coming, or is right around the corner, and they have to be stellar earnings in order for this market to hold up at these valuations. So just keep that in mind. Transports, again, had a nice move up, but didn't quite get above. Well, we did get a little bit above it, this downtrend line as well. But again, a lot of supply. You could see that. So until we really get really above this area, you know, to me, and that's going to be making new highs. And we came off over about a little over 6, 7 weeks of straight up in the markets. I would be really suspect of any type of rally. That's what I'm looking at the moment. IWM, obviously the weakest of the bunch. You could see here that we still haven't gotten across this big horizontal area of resistance. And again, take a look at the big supply that's above here. You could see that here in our volume zones. And you bring that all the way across. I mean, even if you get to, let's say, 118 in the IWM, you still have a ton of supply to work off of before you get through it. And if you do, then you got the thin zone here. So something that I'll be watching really, really closely to see if this market has additional legs to move up higher. Diamonds doing quite well, as you can see here. Diamonds is actually, it's a lagging index, but it's actually almost at its high, and kind of eating through the supply area. So we'll see. I don't like to see laggards lead. I want to see our leaders, such as the IWM and the transports lead, and the NASDAQ. Haven't quite done so just of late. But let's keep an eye on things and see where we go. But you could see here again, Q's approaching some heavy areas of resistance. And again, a lot of supply up in this area here, 115 and 109. So let's say 110 and 115. It's going to have to eat through this before we start to move higher. But again, guys, I'm really cautious here. Again, day trading, not so much. You pick the side, you look for an entry, and then you're pretty much good to go. But, for the longer term investor, swing trader, be very, very careful holding any type of positions going into the overnight session. I mean, you could wake up, markets down 30 handles. So just be very, very careful and cautious. Have a great day, everybody. Good luck trading today. We'll speak to you tomorrow.